You are listening to the Will Power Podcast. Welcome to the show. I am Will Holdren, and I talk with some of the most influential CEOs, entrepreneurial leaders, and thought leaders to reveal the secrets that have led to their success. I believe that with the right knowledge and mindset, you can do anything you say your mind to. So if you want to learn how to change your life for the better, if you want to learn how millionaires actually became wealthy, or if you want to develop and start your own business from the ground up with the right knowledge to help you, then you are in the right place because this is the Willpower Podcast. How are we doing, everyone? My name is Will Holdren. I am the host of the Willpower Podcast. Today we have an incredible entrepreneur. His name is Brad Blazar, and Brad is actually a capital raising expert. He has helped individuals, and he himself has raised over $2 billion, which is absolutely incredible and such a great achievement. With that being said, he's also the host of his own show called the Capital Catalyst Show. And he actually had there it is behind him right there. Yep. And he actually had his first successful company at the age of 23, the gas and oil industry. So it's an absolute honor to have him on here with us today. So with that being said, first and foremost, Brad, thank you so much for joining me.
Great. It's a pleasure to be here, Will.
Yeah, my pleasure. I love everything you're doing. And, we interview a lot of entrepreneurs. We've had over 200 episodes now, and a lot of them are in the capital raising business, right? Because you need capital to get started, no matter what industry you're going into, no matter what business you're trying to grow. And capital is the foundation of how you really get started. Before we jump into that, I just want to ask you a quick question that I ask all of my guests, which is one, what makes you want to take time out of your busy day to hop on podcasts like these to really go out there and just share your story?
That is a great question. Really, there's two things. Number one, I know in business, there's nothing better than being in front of people, right? So there's obviously the exposure. There's obviously being in front of your audience, kind of sharing what I've done and more importantly, what we're doing. And I think the other is just because while I am in the capital raising business, right, teaching people how to do this, I really like to think that I'm more in the what I call transformational business. I know that what I do, once learned, can dramatically change people's lives. And so the more lives I change, man, the bigger legacy I leave.
Yeah, that's amazing. And like you said, it's about eyeballs in today's world and getting attention on your business. So it's a great way to do that. And you're impacting a lot of lives at the same time. So it's a win-win. So with that being said, walk me through kind of your journey. Obviously, people know you now for capital raising, and obviously you're so successful at what you do and coaching others to kind of get into that realm as well. But walk me through, how did you actually get here as an entrepreneur and actually get involved with the capital raising world and industry?
So it's a really kind of an interesting journey. I grew up in your traditional middle-class family, had three siblings. My dad was an executive. My mom, for the most part, was a stay-at-home housewife until me and my siblings kind of left. And then she went into real estate as a real estate agent in Dallas. But I was actually wanting to be an architect. And so I literally went to college and went to architectural school. And in my senior year, I responded to an ad in the local newspaper. This was, back in the early mid 80s. So it was before the advent of the internet, and got hired by a very small oil company. I was 21 and just looking to make some money. And so the CEO kind of took a liking to me. I was a little cocky kid. I guess I didn't know any better. And he said, look, if you can come here between classes and, after school and whatever, we'll teach you how to get on the phone and build relationships and raise capital. You'll be paid a nice commission. And I'm like, great. And so at the age of 21, I started the process based on the training that these people gave me, learning how to raise capital. And after doing that for about a year, I then went to work for another oil company doing exactly the same thing, but unfortunately found out through some of the clients I had that were in the oil business that they were basically running a scam. They were defrauding people. And so immediately I resigned and got in touch with a lawyer, and we filed a class action lawsuit because I wanted to help the investors that had entrusted me hopefully recover the money that they had invested once we discovered this. And they never met me. Most of these investors were just talking to me by telephone. So they might have thought I was a 35, 40-year-old person. Here I was 23. And they said, well, Brad, what are you going to do now? And I said, I don't know. And they're like, well, why don't you do the same thing that they were doing, but just do it honestly. And so I saw this huge door just open. And
Yeah.
so, having a bunch of investors ready to basically throw capital at me, I said, look, my skill's raising capital. I don't know the first thing about drilling a well. I don't know the first thing about running a company, but I do know how to find those people that can do those things for me. And so at the age of 23, I launched an oil company and, brought in a geologist to bring the deals, got a securities attorney to handle that element. And, over the course of a little over 10, 11 years, we built a pretty nice sized little business for ourselves. I was, I guess, the J.R. Ewing of the family, because that's back when the Dallas TV show was the biggest TV show on TV at the time. But it was just a great time in my life, doing deals, raising capital. We had projects in Texas, Oklahoma, Louisiana. And then the shit hit the fan. Oil prices plummeted in the late 80s because OPEC was in much more control. Back in the 1987 era, they had a whole tax reform act, took away all the tax incentives. So the landscape changed. And so that's when I decided to go back to school and basically complete the education that I had never completed. But I did not continue with architecture. I changed majors and came out with a finance degree. And now I've got a nice little piece of parchment. Congratulations, college graduate. And I'm out there, looking for a job, newlywed. And it was a very disillusioning time in my life because people wanted to hire me at a salary that was close to what I would make in a good month. And I just said, man, this ain't going to work out very well. And so literally for about a year, man, I was just living off of savings, watching my savings get depleted, not really knowing what the next chapter of my life would be. Wow. And I was watching a TV show where the host of the show was on stage in front of his audience. And he said, most people go through life and they never find what I call your something special. It's like, if you've ever been to that little Build-A-Bear factory, it's something in you that you can do really well. But the problem is 97% of the people in the world will never figure out what that is. That's why we have so much unhappiness. That's why statistically 67% of the people in the workforce already got one foot out the door. Their employer doesn't even know it yet. And I still remember to this day, like vividly, like it hit me like a ton of bricks, like, holy cow, what I know how to do is raise money. And I said, if I can package that up and create content, deliver it to the world, that will help so many people. And so I went to work professionally, basically as an outsourced capital raiser, and was hired because of my skill, what I could do. And so I was brought on as the head of capital markets for some of the world's leading financial services providers, as well as some of the largest real estate syndicators that today manage multiple billion-dollar portfolios.
Wow.
And then when I kind of semi-retired, I started doing some consulting, and I found that a lot of people have this dream. And so, I'm of the belief that most everybody in the world has a dream or has a desire to be doing more, doing something bigger in life. We all want a seat at that big kids table. And when I would ask them, well, why are you not doing that? It was never the fear, Will. It was like, I don't have the money to get started. And I was like,
yeah.
Don't you realize every day when you get out of bed, you're surrounded by all the money you need to pretty much do anything in life you want, desire? We just call these other people investors. And right. So that's when I decided to launch the platform, which has now exploded. We're in 28 countries. We're a multi-seven-figure business, soon to hopefully be 8. And, it's just really been amazing to see the journey of other people whose lives we now have impacted that are, now doing the things they've dreamt of doing, walking away from their full-time jobs, no longer exchanging time for freedom, and really starting to create for themselves and their families some really, truly amazing things. And so that's why I get out of bed and do what I do every day. It's because of them, really not for me.
Yeah, that's amazing. And that is truly an incredible story and how you got to exactly where you are with how many ups and downs you've had along the way, especially because that to me showcases entrepreneurship in a nutshell, right? There's going to be a lot of downs and you just got to be able to figure out a way to stay level and kind of work your way through it. But I specifically want to go back to your story. When you were 23, you left the company that was kind of a sham raising money. And then you finally started your own company at 23 and raised your own capital. But what you said to me was interesting is that you didn't know anything about really the oil industry, right? And you started an oil company. So walk through, I mean, you're 23. What are you pitching to these investors to get them to say yes, to put money into your oil company that you know nothing about in the oil industry? And you're 23.
23-year-old kid. Of course, I had turned my back to completing my education. My parents didn't know that I was basically just not showing up at school. I was building a business. And so obviously when they got my grades at the end of the semester, that was a conversation I really wasn't looking forward to. Straight incompletes and straight Fs. Um, but anyway, what I realized is I needed a geologist. I needed someone that could bring me the deals, that could find the land that we could go out and drill on. I needed obviously a securities attorney to, put together the offering memorandum. I needed a accountant that would take care of my books. And so as I slowly, put the team together, I finally had the geologist bring me a deal. And so the first deal we actually raised money on was a lease. We call them a lease out here in Texas, where we were going to go drill a well. And so that was essentially what we were raising capital on. It wasn't that they were investing in the company, they were investing in the well that we were going to drill. And obviously, if we hit oil, they would share in the profits and the proceeds. And then, of course, around me, they weren't investing in just this little 23-year-old kid. It's like, hey, I've assembled a team that brings together over 50 years of experience collectively in this industry. Got a geologist, got an attorney, I got the whole team, we got a driller. And so when people looked at the team, they just realized, well, this dude is just a composer. He's got a whole team of people. So it brings execution and much greater certainty to the outcome. And that's one thing that really has always resonated with me. And, when I had Kevin Harrington speak at one of the events we hosted, he said, look, a lot of people come into Shark Tank and they're great, intelligent people, but they don't get a deal. And a lot of times they leave and they're like, what did I do wrong? Well, what they did wrong is they didn't convince us as the sharks that they could execute on whatever it was they were trying to do. That is the key word, execution. Like, why would I write you a check and invest with you if you can't convince me that you can execute on this investment objective? And there's a lot of great business owners and entrepreneurs, but in their business, man, they're spinning all the plates. Like, they're doing everything. And when I look at these entrepreneurs that are doing a lot more in their business than I think they're capable of, I really get nervous as an investor. And so you have to build depth, and you have to show that, you've got a team, because building a multiple 7-figure, 8-figure business is not doing it yourself. You'll never get where you want to be as a solopreneur. As Mark Cuban likes to use the word, you're a wantrepreneur. You're not an entrepreneur. There is a big difference. And so that's really what allowed me to have quantum leaps in building the business year over year. It was just, had a great team of people.
I think it's such a great point. I think a lot of people starting out, like you mentioned, they're solopreneurs. And like you mentioned, it's hard to cut a check to someone like that when they're not professionals in finance, for instance, or know how to run the books or something like that. So
exactly,
it's important to have that team. But when you're starting out, I mean, how do you afford to hire that team if you don't have the money to actually hire that team out and build out that as employee base starting out?
You barter, you do what you can. You say, look, I don't have the ability really to pay you probably, what you're accustomed to. Can we carve out part of the deal and pay you out of the revenues? And, you just get creative. That's certainly one way to do it. Another is you hire, junior people. You don't need a full-time CPA. Maybe all you need is a bookkeeper, right? And so you find a bookkeeper that, will keep your books and records and do it the right way. And, now they know how to, of course, use Quicken and, other apps. And so, now at the end of the year, it's not as challenging for you to go to an accounting firm. But when you're raising money and you're doing deals, depending on the types of investors you're working with, there's not the need to have audited financial statements, right? We're not a public company. So, you bring in a junior person, same thing with a lot of the other things. And as you build, you continue to always upgrade. I take the approach now, just where I am as a business owner, that I'm like the owner of a sports team. And so when I hire somebody on my team that is, not a closer, setter, but, a partner, I say, your job is to get me to 5 million or 10 million in revenue, and I'm going to give you 2 years to do it. And if you don't, we're going to replace you. Just like Bill Belichick says to a quarterback, hey, your goal as the new member on the team is to get me to a playoff game or the Super Bowl. And if you don't, they're always hiring. So you always are in what I call this upgrade your talent mode as a business owner. And you should always be doing that as a business owner, because, you want people on the team that can grow your business. I've come to learn that, as much as I'm a very loyal person, sometimes I've got a working relationship with somebody and it's been a couple of years, but I just realized they do not have the skill set I need to get me to that next level of growth.
Yeah.
And that's hard because you're loyal to people and they've helped you build a business, but you just have to sit down and say, this person's skill set or this person's knowledge cannot give me the quantum leap I'm looking for. And one of the things that I've learned in business that a lot of people struggle with is they say, how do I do this? And they get on the internet and they research, they spend hours. How do I do this? That's the wrong question, man. The question you should be asking is, who can help me do this? Because somebody out there has already done more than likely what you're wanting to do. And that's why the coaching business is such a huge industry today. So
Yeah.
I'm always asking, who can get me where I want to be? And I'm willing to pay that person handsomely because if I've got a problem in my business, I'm willing to pay money to get that problem solved.
Yeah.
And so that's been the biggest learn for me in my coaching as an owner. It's, who can I find that can give me these quantum leaps and or instill the systems and structures to help me continue to grow so I don't just plateau and just flatline.
Yeah. I really like that analogy too of how you're kind of the coach of your own team and you got to make sure your team is A plus and trade them if they're not, right? Just to
Exactly it. And you have to broadcast that more importantly to the team so that they show up every day with that competitive mindset. Like, I hate to say it, but you are replaceable. And if you don't want to keep your seat on the bench, you better step up to the plate and bring your A game each and every day. Because every day when I go to work, it's like I'm playing to go to the Super Bowl.
Yeah, no doubt. And obviously you work with a lot of startups, people that are founders of companies that are just starting off the ground. So walk me through for these guys trying to go out there and raise their money. I mean, how are they finding these investors out of the gate? How do you attract these investors? And then once you have someone you're pitching towards, what are the key factors that you want to be talking to them about? And what are the key factors that if I'm the investor that I want to hear, that I want to see, that would make me want to put capital into this company?
So that's a long question with a long answer, but just very quickly, the first thing is understanding that there are different types of investors, right? So you, of course, have high net worth individuals. These are people like doctors, engineers, business owners, highly compensated executives. And then, of course, you have other types of investors, private equity firms, venture capital firms, angel investors, family offices. And so depending on, kind of where you are in your business growth and trajectory, it's important to be focusing your energy on the types of investors where you are at that stage in business is going to resonate the most. So if you're a startup, venture capital firms, that's what they do, right? They take risks, maybe angel investors. The other is kind of crafting a really good story because raising capital is understanding that the investor is making an emotional decision. Anybody that believes otherwise is just full of themselves. It is an emotional decision because I know, like, and trust the person I'm investing with. Now, after I invest, then I justify that decision with some logic that I put behind. Oh, that was a good investment. It's going to help me solve my problem. It's going to help put my kids through school, whatever. But it is all emotional. And so part of being a really good capital raiser is also understanding some of the mistakes that other people make. And the biggest mistake that most people make as new capital raisers is they have a need for capital. You got a deal, you got a project, you got whatever the investment is, and you pitch whatever that opportunity is to somebody in usually the very first or the very second meeting. And so now when you're done pitching the opportunity, the other person just casually says, sounds like it could be a pretty interesting deal. Do you have some information you can send over so I can take a look at it? And so now you send them everything. And they never invest. And you're going like, what am I doing wrong? What am I doing wrong? Well, here's what you're doing wrong. People need to trust you. You got to think of this like dating, right? We don't go meet a pretty gal and then ask her to marry us the second, third date. There's a courtship. Right. Same thing. So I always tell people, slow this down. Spend 2 or 3 sessions with this person and just keep telling them right now, I just don't have an investment that I can share with you, Will. I wish I did. And come up with some reason. It's because I have a bunch of investors and I always give my investors the preemptive right or the right of first refusal on all my new projects. And they tend to fill up pretty quickly. So I'm just kind of holding people off. But at the very end of typically my second or third meeting with them, when I built a nice foundation of trust and they know me better and I know them. I say, hey, I keep a list of people on my desk that have expressed interest. Would you like me to add you to that list and call you back when I think I have something that you could get real excited about? When they say yes, what they're really saying is, I trust you enough in this process. Let's move to the next step.
Yeah.
You see, because now I know want to sell you my deal. I'm pitching you because you asked me to. And so it changes the whole dynamic of how you go about talking and communicating to people. And so now, when I'm pitching you, it's because you've asked me to. Now I send you all the stuff to look at. And then now you've got a much greater inclination and desire to invest with me because I've invested myself in you. And it's really amazing. A lot of people don't understand the way that we build relationships and the way that we build trust is just simply asking people questions, being a real great active listener, and showing and expressing interest in them and their lives.
Right.
And if you do that, it's amazing how people will move forward and invest with you. And then it's just a matter of just repeating the process over and over and over. And more importantly, understanding the importance in their network. Never seen a poor person hanging out at Necker Island with Richard Branson, if you right. And so you know that these rich, wealthy people, more than likely, they got other rich, wealthy people they know. And so after you've gained that investor's trust, you just say, well, who are you connected with, man, that I should also be speaking to?
Yeah.
Right. And now Will says, I got a business partner. I go golfing once a week with my friend Joe. And so you start leveraging what I call the low hanging fruit because the trust that person has in that investor now transfers to you. You're now a good, honest person. And
Yeah.
now you start seeing quantum leaps in your capital raise. And it just gets easier and easier and easier the longer you do it.
Yeah. That's very true. It's very good points as well. Like you said, it's all about relationships and establishing that trust factor, not going for the sell right away. Um,
Absolutely.
so another point I want to dive into is let's say people are able to raise capital, they got investors say yes, but in actuality, how do you structure the deal? I mean, are you giving them equity in the company starting out, like you mentioned, and then after you have one investor, you're already given out half of your equity. And if you're going out to raise more money, I mean, what do you do for the deal for the next couple of people because you don't want to give out more equity? I mean, is it just like a revenue split, or how do you normally structure that?
So every deal's different, as a business owner or entrepreneur, you don't have to give up any equity. You can simply do what we call a note. And so you can raise capital. Maybe I'll raise $5 million for my business as a note. I'll pay interest to the investors every quarter. And then at the end of 3 years or 5 years, whatever that maturity date is, they get all their money back. I haven't given up any of the business. Other ways to do it, and typically this is what we see in like a real estate syndication or fund, is you say to the investors, I'm setting aside 60% of the upside or the deal to you. And then I'm taking, 40% for being the general partner or the operator doing all of the work because you're investing passively with me. And so let's just say that, that 60% is $3 million based on the amount of investment that each person makes. They get a pro rata piece of that pie or that equity that I'm making available per pursuit of their investment. And so that's typically how a lot of deals, a lot of initial capital raisers are structured. But it's also really just talking through with the attorney or someone like me that's had a lot of experience, because a lot of times with a new business owner, they'll say, look, I need to raise 3 million. And I'm going to more than likely have a second round as we grow the business, probably have a need for another 5 million on top of that. And I'm like, well, the way that you can do this so it's not dilutive to your earlier investors is you have two classes of stock or you have two shares. One is an A share, one's a B share. This group of investors are the early adopters, therefore they should get rewarded with a higher return. The later group is much less risk. So they should actually get a little bit less rate of return. And so there's creative ways that we can structure things in finance and in syndications that hopefully avoid dilution, which means you're taking away from somebody that already invested. Or at the same time, there's other creative structures that we can use, convertible notes. A lot of times in tech out in California, you hear something called a SAFE agreement, which basically starts off looking like interest payments, but then converts to equity at some future date. So really, it's understanding every business is the same. A lot of industries, a lot of sectors are very different, and it's really doing what you believe to be the best strategy for you as well as growing that business.
Yeah. And it's being comfortable, right, with the numbers as well and having a good understanding of how the deal's supposed to work and when, what investors are trying to see return wise and, how to make sure everyone is in a good spot.
It's also knowing the market that you're in. If I'm a real estate entrepreneur and I'm trying to raise money and my competitors are out there with a 7% or 8% distribution that's paid out quarterly, and I've got a deal, I'm going to struggle to raise money if all I can distribute is 4 or 5%.
Right.
And so when people approach me and say, hey, we're doing a deal and it's a development deal and we're not going to be able to pay out any money probably for 12 to 18 months because there's no tenants, I'm like, you got to realize you're competing with people that are buying stabilized assets, cash flow from day one, buddy. So what can we do to incentivize investors? We can create a distribution, even though there's no tenants in the building because there ain't no building. And they're like, well, how do we do that? It's called a return of capital. You just tell someone you're going to give me $100,000 in the quarter following the one in which you make your investment. I'm sending you your first check. And now that spigot opens up. And they're like, you can do that? Well, you can do anything as long as you disclose it in the memorandum. Right. So now the investor's happy because they're getting that cash flow. Yes, as the business owner, you're getting a little bit less than what they invested because you have to give some of it back, but it's totally legit. It's totally honest. And a lot of the big companies that raise hundreds and billions of dollars, it's exactly what they do.
Interesting. And like you said, yeah, I mean, you got to establish a memorandum. And so for people in that scenario, I mean, obviously you got to have the team around you, but are you working with attorneys in all these situations that are drafting up these memorandums, or is this you starting out as the early entrepreneur doing it yourself and kind of just laying out the terms yourself?
It's a great question. Here's the scary thing. If you're working with accredited investors, there is no law. The SEC does not say you need to have an offering memorandum. There's not, quote, a legal requirement that you even need one. Now, what I will tell you is it is definitely best practices to have one, and here's why. The offering memorandum, or PPM, if you've ever seen one, is just a lot of risk disclosures. It basically tells the investor all the conceivable possible things that can go wrong. Yeah. And you've got to look at this document as your insurance policy as the one raising the capital, so that God forbid something does happen, you can say, I told you so. So a really well-drafted memorandum is nothing more than a risk disclosure document, because as I like to say, sometimes the best plans get thrown out of the window, and sometimes just bad shit happens to great people, right? You got COVID. Did that not disrupt a lot of businesses? Yeah. You got hurricanes, you got tornadoes, you got the wildfires out in California that just wiped out billions and billions of dollars of real estate investment. So by having a document that discloses all these risks, you're bulletproof, hopefully. And so, yes, there are templates that you can download. I call them PPM factories, but I do not advise doing that. Everything we do here at Cowpel School, we work with 5 different law firms that are all experts. Now, personally, myself, because I've got 30 years of experience, I probably drafted over 200 memorandums over the course of my career. So I know how to do this. But when it's done, I will have a legal team or an attorney review it just so they can put eyeballs on it.
Gotcha. That makes sense, just to be extra safe. Before we run out of time, I just got a couple more questions for you. So one, you mentioned that risk obviously is a big factor, and I think it fears a lot of investors or business owners, especially trying to go out there and raise capital. Like, what if it doesn't work out? Investors lose all their capital. Like, what do you do in that situation? What's interesting to me is that you actually had that situation when you were 23 with that company. You raised money and it went under. So I'm just curious, like, what happens in that scenario after your company goes under? Your investors lose their capital. What are those conversations like? Because obviously you were able to rebound from that, still raise capital going forward, and kind of have a good reputation still. So,
well, I remember something that my grandfather told me many years ago. He said, the one thing that you have to protect in life is your reputation and your good name and what you stand for. The second that's tarnished, you're done. Yeah. And I've really taken that to heart, because in an industry like oil and gas, there is always the risk of drilling a dry hole. This is one of the risks. And so that is analogous to a doctor that goes into surgery and the patient doesn't survive. Imagine walking out of the operating room where you got the family and having to communicate to them that the person died. Well, same thing, guy just wrote me a check for $100,000 and it's gone. But by being a person of integrity and being fully transparent and sharing the good news with the bad news, you build trust. And what really surprised me when I was in oil many years ago is very rarely, but every now and then, we would end up drilling a dry hole or maybe a well that was so marginal that it really didn't make sense to produce it economically. And people would then invest with me again
Yeah.
and then again. And I would be like, you just lost $100,000 with me. Why are you investing with me again? And they
Right.
would say, it's because we know you're honest. Brad, this is just part of the risk of the business. And we obviously are not investing all of our money in this one well. We're diversifying it because we know that there's going to be sometimes we get to second and third base, and we know sometimes there's going to be that home run. The reason we continue investing with you is because you're a person of integrity and you're honest.
Wow.
And, of course, we were using the best of the best, Schlumberger, Halliburton, Dresser Atlas out on our fields. But I think it gets back to a message to anybody that wants to ever raise capital. If something happens negatively in the business, don't try to sweep it under the rug. Don't try to, hide it. Just be totally transparent, and you'll gain the trust of the investors and they will respect you much, much more
Yeah.
because most of the times as a business owner you will resolve it, you'll work out a solution, you'll figure something out that hopefully will make the situation better. And I tell people, yeah, raising money's hard, it's a lot of work, but really the hard work starts after you raise the money,
Right.
because now you got to prove yourself to that investor that's entrusted you, and now you got to win their trust. And of course, if you do that by keeping your word and keeping to what you say you're going to do, a lot of these investors are not just one-time investors. A lot of them are making multiple hundreds, if not seven figures. And so they'll start the process with you, just like, of course, Gordon Gekko in Wall Street with Buddy. Hey, Buddy, here's $1 million. Let's see what you can do with that for me. And once he earned Gordon's trust, his whole life changed, right? A
Yeah.
lot of investors are like that. I remember there were investors that came to me, hey, Brad, here's $10,000 for that first well. And then, 30, 40 days later, I'm doing another deal. Here's 50. And before you know it, they're putting $100,000 with me, like on every deal, because I gained their trust. And so it's a process, but it's a process that if you live up to the standards and you do what you say you're going to do, can really change your life.
Yeah. I think that is such a great key principle of just being honest and having integrity. And like you said, even if something fails, the investor understands the risk. I mean, if they're accredited investors, they understand what's going on, they understand the risk behind business, but like you said, they can still keep coming back.
Exactly.
But
Exactly. Don't try to hide it. Don't try to sweep it under the rug. Just be totally transparent. Say, we're dealing with some challenges. This is what's going on in the economy, or this is what's changed demographically in the market we're in. And here's the strategy. Here's what we're doing to resolve that. They'll
yeah,
really respect you for that. They'll live with you.
yeah,
Yeah.
that's awesome. And so I just got a couple more questions for you. So one, what would be your number one book recommendation for anyone out there listening, if you have one?
Any one of my three books. No,
I
I'm just
love
a little biased on that question for obvious reasons, Will. But
it.
there's a couple of books that I would recommend. One, of course, is Rich Dad Poor Dad by Kiyosaki. That's a great read, of course.
Yeah,
I just got done reading Relentless by Tim Grover. It's a great book.
yeah,
And then one that's really, I think, a great book. My good friend Coach Michael Burt. Get a copy of his book called Pray Drive. Yeah,
awesome,
change your life. Yeah, Pray
awesome.
Drive by Coach Michael Burt.
I'll have to check into that last one. And then my last question for people listening, how can they reach out to you or contact you and your company? And what's the best way for them to go about and do that?
I'm all over social media. Just put in my name, Brad Blazar. It's Blazar. There's no E's in the spelling of my last name, and I will pop up like, just everywhere on your screen. But, through my website, just bradblazar.com. We got a contact page. You can go to Instagram, just DM me. I'm the guy with the little blue check, so you're talking to the real deal, or on any other platform on social media. I got a whole team behind me. We love to engage with people. We love to have what we call a clarity call, kind of finding out where you are, where you're wanting to go, and the tools and resources we have, whether it's a boot camp or, coaching or, connecting you with somebody in our network. We're all about basically problem solving and helping other people fill that gap so that they can get from where they are, where they want to be. So real easy to find me.
Awesome. All right, guys, there you have it. Go reach out to him on Instagram at Brad Blazar. And with that being said, Brad, thank you so much for joining me today.
Thanks, Will. It's been great. You're a great host, man.
Likewise. Thank you.